Hi, this is Ankush here, and I welcome you to the first session of Trading with Candlesticks. Now, before we jump to the recommendations of what to buy and what to sell, it's very important that we start talking in the same language. So, my first episode in this series will consist of basics of candlesticks, how to view stock markets, and what actions can we take based on those candlesticks. I will conclude the session with some practical examples to see where the stock prices went after giving the indications. So let's start. The concept of candlestick was developed by a Japanese trader 400 years back whose name was Homa-san. He realized that the price of any commodity depends on two topics. One is the demand and supply, and second is the emotions. Using this technology of candlestick charting, he incorporated the emotions into the price of rice trade and made a fortune. Now, these same concepts or similar concepts are being used in the stock market today to invest, and the modern authors often call it crowd psychology. Before we delve into the crowd psychology or the concept of how emotions affect the price, let us first see what is a candlestick. Let me give you an example. So, a candlestick is either green or red in color. Green indicating it is bullish, which means the prices are expected to go up or has gone up, whereas red is indicating that the prices had gone down. Now, candlestick has three parts. One is the body, the upper shadow, and the lower shadow. To give an example or to understand it better, let us go through a couple of examples by drawing our own candlestick charts. Let us assume that a stock opened at a price of 100, closed at a price of 110, recorded a day's low of rupees 90 and a high of 120. So the first thing which you observe is the closure price is higher than the open. Hence, the body of the candle will be green in color. Once that is determined, the upper and the lower shadows are made based on the high price of the day and the low price of the day. Let's take another example with a minor change. Here, the low price is same as the open price. In this case, how does the candlestick look like? The candlestick would have the body between the open and the closed price, but if you observe compared to the previous one, there is no lower shadow, and this is something different. Let's once again change the high price and see what is the difference in the candlestick. Once again, a green body having a lower shadow, but there is no upper shadow because the open price and the high price, the closed price and the high price is recorded at the same level. Now, what happens when the low and the high is same as the open and the close? In this case, there will neither be an upper shadow nor be a lower shadow. Now, what does this example indicate? In our normal line graphs which we see on the websites, they incorporate the daily close of the stock price and draw a line graph. Whereas candlestick records 4 parameters for drawing a candlestick, and hence a lot more information is incorporated into these charts, and accordingly a trader can also interpret and take different actions also based on what is the low, high and the opening price for the day. We will gradually see how this can be done. I hope the first part of today's video we have understood how a candlestick is read. Now, moving forward, I would also like to tell you how to view the stock markets. Whenever we open any financial channel on the TV, there are two words which is very common. One is the bull and one is the bear. For any person playing in the stock market, it's important to understand that whenever we say I'm bullish on a particular stock, it means I'm expecting the stock price to go up. Whereas when I say I'm bearish on a particular stock or a particular index, I expect the share prices for that particular stock or index to go down. A trader usually looks at stock market like a boxing match between the bear and the bull. And based on the outcome of the match, he tries to put money into the stock market and make profits. That is exactly where patterns and charts help us, because it helps the trader to analyze who is most likely to win the battle. Let's take an example once again to see how it works. Let's assume on a stock price, I see a bullish candle with no or very small upper and lower shadows. This clearly indicates that bulls are in charge of that particular stock, and in the near future, the price of the stock is about to go up. Hence, as a trader, I will put my money into buying the stock. On the contrary, when I get a red candle, it's a clear indication that bears are in control, and there is a very high probability that the share price is about to fall down. Hence, I would end up selling that stock. There is also a third type of a candlestick which has a long wick or upper and lower shadows, but it has a very small body. This usually happens when the opening and the selling price is extremely close to each other. In this case, as a trader, either I will switch my side from bears to bulls or vice versa, or simply not trade in that particular stock. Nonetheless, let's keep the third style of candlestick outside the scope of today's discussion. Before we conclude the session, I would like to give you a few practical examples which I have taken out from the past 6 months to show you how the candlestick charts can be used to predict the stock price. Now, if you are looking at candlestick chart for the first time, it must be really overwhelming. So let me give you a very short example. In this particular chart, every candlestick represents the price change of that particular stock on that particular day. So for example, this one candlestick here represents the change in price on that day for Reliance Industries. Now this is the chart for Reliance. Let's see how the price movement for Reliance has happened. Between August 19 to Jan 20, the prices of Reliance Industries was regularly increasing. On Jan 20th, when it was nearly 1600 rupees, we got a signal saying that bears are coming under control, or bears will start controlling the price of Reliance Industries. If you see, just post that, there was a sharp fall and it almost touched 870. So if I am a trader and I follow the candlestick chart, I would have sold my shares already at about 1500. Let's take another example from Reliance Industries. What happened? Did we get a bullish signal before the share prices rose? The answer is yes. Here, if we see on 7th April 2020, we got a clear signal that the bulls are coming in control of Reliance Industries. And here, if you see, since then, the share prices have rocketed up, and till date, there is no sign that the share prices will fall down or the bears are coming under control. Hence, we are still bullish on Reliance Industries. Let's take another example of a very good stock called TCS. What happened here? Here, we got two signals in the first week of November that bears are coming under control through dark bearish candles. Yeah? And since then, if you see, even though the prices did not crash immediately, the prices did not increase beyond where the signal came, and finally it crashed up to 1550. Again, another example where we could have used candlestick charts to determine the direction of the stock. Let's take the last one example for today. This year, in February and March, we were hit with COVID, and many experts were predicting that it's doomsday and stock markets may not rise for another year. But Infosys gave a bullish signal on 24th March, a big bullish candle with a very small wick on the top or an upper shadow. And since then, the prices have rocketed from 550 to 925, which is an increase of more than 50%. Now, these are some examples which I have taken from the recent past, but if you look at any stock across the globe or any index, there are innumerable such examples to tell you that the candlesticks will give a signal just before the prices start to increase or decrease. And that's exactly what you want to do as a trader. Buy at the top and sell at the top and buy at the bottom to make money. Now the question is, whatever I have shared today, is this enough? The answer is no. We can use this to make money, yes, but there's a lot more to it, which I plan to cover in the upcoming videos for me. And just to give a glimpse to you, in my next video, I'll come up with certain candlestick patterns like the pin bar, morning star, cloud cover. How do we read them? And that is when we will cover the candlestick patterns and also enter into support resistance topics before we come to the recommendations. Before I close my video for the day, I would like to close it with one quote from Mr. Warren Buffett. Stock market is the device for transferring money from the impatient to the patient. If you like my video, I would request you to kindly subscribe. Click on the subscribe button so that you can get regular updates whenever I upload a video. So till next time, stay safe, stay healthy. Thank you.